Right. So while preparing the financial statements for 32, ABC Limited, a listed entity, provided the following information. Export of the balance sheet as at 31st March 32, equity, current liability, financial liability, trade payable, outstanding to micro and small, then dues for creditors other than micro, small, other financial liabilities. Then aging of trade payable, aging less than 3 years, 3 to 5, more than 5, non-MSME and the MSME, and the total trade payable, undisputed, disputed, and the total. Additional information. A, while performing the stat audit of ABC, identified that the total trade payable reported in the balance sheet and the total amount reported in note 10 are different. Payable, which is eliminated as a part of consolidation adjustment, and hence the intercompany trade payable, which is eliminated as a part of consolidation adjustment. Hence, there was no requirement to show intercompany trade payables in the aging schedule. A accepted the explanation and did not perform any further procedure to validate the explanation. When audit committee inquired with Mr. A as to how they have verified and validated the segregation of trade payable, A replied that they purely relied upon the representation as there was no alternate procedure available to gather the sufficient appropriate evidence to validate the said information. Moreover, they informed the management that they have not qualified their opinion as they relied in true faith upon the management representation. While performing the audit procedure to validate the trade payable aging, Mr. A identified that management has calculated the due date of trade payable from the end of 180 days from the date of transaction. A found it appropriate based on the conservative approach. A did not qualify his audit opinion on the financial statements for 32 on any grounds. Also, A specified that the financial statements give a true and fair view in compliance with the accounting standards notified under Section 133 and as per Schedule 3. While preparing the audit report, A provided the following information in the key audit matter. While auditing the trade payable, the auditor identified that trade payable balance includes 100 lakh payable to the intercompany which is aged for more than 3 years. Upon inquiry with the management, it was identified that the said amount is not paid on account of a dispute with respect to commercial term. No such amount was outstanding as receivable in the account statement shared by the intercompany. The amount has already been written off by such intercompany in the past year. We have relied upon the assessment performed by the management with respect to the litigation and the disputed trade payable balance. Moreover, the account is not multi meaning the representation was performed on the said balance. Disputed trade payable disclosed, there were claims against the company which were not yet acknowledged as debt. The aggregate amount and the claim were 25 lakh. As per an expert hired by the management, no amount is required to be provided in the books of account. As in all the claims, there are high chances that the decision will be in the favor of the company. Following were the materiality levels decided by the auditor for the current period audit. Materiality 50, performance materiality factor. Materiality for aggregate uncorrected misstatement, like your tolerable misstatement, 1 lakh. On the basis of the above mentioned facts, you are required to answer the following MCQ. In this given situation, whether A will be guilty of professional misconduct, right? So it says yes, 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 and no, he is not guilty as he's performed all the audit procedure. No, he's just taken the representation from the management without doing the required checking. Right, so 711, that is advertisers, right? So it's not coming under the first schedule. Then again, 7 and 8, it is regarding the advertisers and the NOC. So again, not coming under the first schedule. And 7 and 8 of the part 1 of the second schedule does not exercise due diligence or is grossly negligent and fails to obtain sufficient information which is necessary for the expression of the opinion, right? So that is why guilty under 7 and 8 of the part 1 of the second schedule. Whether financial statements given in the scenario are in confirmation with the requirements of Division 2 of Schedule 3, yes, the financial statements are in confirmation with the requirement. No, management should have eliminated the intercompany trade payable balances from the amount disclosed in the standalone. This will bring note 10 if aging schedule and standalone balance sheets in alignment. No, management should have not disclosed the disputed trade payable less than 3 years as these trade payables are still under the period of limitation as per the Limitation Act and they should not be disclosed in the financial statements. Okay, no, management should have added the intercompany trade payable balance to the aging schedule. This will bring note the aging schedule and the standalone balance sheet in the alignment, right? So obviously they should have made the disclosure for the intercompany trade payables in the standalone financial statements. In continuation to MCQ number 2, what is an appropriate way to report the above mentioned issues? A should have expressed a modified opinion as he was not able to gather the appropriate sufficient evidence to validate the disputed trade payable. He should have modified or issued an adverse opinion as the financial statements were not in confirmation with Division 2 of Schedule 3. Mr. A should have given an unmodified opinion as he was not able to gather the evidence. How can that go together? Mr. A should have expressed an unmodified opinion and he was able to obtain all the information. He should have modified as regards the cash flow statement was not in confirmation. Okay. And A should have reported the matter as a qualification in key audit matter. My God, what creativity! Qualification in key audit matter. Right. So should have expressed a modified opinion as he was not able to obtain the evidence. Whether the reporting performed by A related to the intercompany trade payables under the paragraph section of the key audit matter in the audit report is appropriate, select from the below option to support your answer. Right? A should have expressed an unmodified opinion. A should have expressed a modified opinion if he was not able to gather the evidence. As per 701, those matters that in the auditor's judgment were of most significance are key audit matters. The auditor shall not communicate a matter in the audit report when the auditor would be required to modify the opinions as per 705, because we say that key audit matter is not a substitute for the modification to the audit opinion. A should have given an unmodified opinion. Again, we don't like that. A should have expressed an adverse opinion and report the said matter under key audit matter paragraph. No. So what seems to be sensible? Modified opinion. And then it says that the modification of key audit matter is not a substitute for modification to the opinion. And as per the expert appointed by the auditor, the exposure for the company can be 20 lakh as in the past in similar cases. The judgment was delivered against the company. However, the management of ABC was of the view that when management has already hired an expert, then there is no need to hire another expert by the auditor. No. Management, you appoint your expert. Auditor, you can also appoint your expert. Seeking your advice, kindly guide the auditor by selecting the below option and what steps should be performed. Auditor shall design and perform audit procedures in order to identify litigation and claims involving the entity which may give rise to an RML. Also, if expertise in a field other than accounting or auditing is necessary, auditor will determine whether to use the work of an expert. Hence, auditor can appoint as expert to validate the assumptions and estimate performed by the management's expert. Auditor shall rely upon management's expert will be equivalent to auditor's expert and no other expert is required to be appointed. Auditor will not rely on the work of the management's expert unless he evaluates the expert's work for audit purpose, including the relevance and reasonableness findings and conclusion. Although in the current case there is no consonance between the management's expert and other audit evidence, auditor is still rely upon the findings? No. Auditor will rely upon the management's expert without evaluating the adequacy. Impossible. So what does it say? Auditor will design and perform procedures to identify mitigation claim if it is an RML. He is in an expertise for an area other than auditing accounting. He may use the work of an auditor's expert and the expert is required to validate the assumptions and the estimates performed by the management expert. So now the auditor's expert is going to validate the work performed by the management expert. So A would be the correct option. Right, so oh my God, quite a lot of MCQs we covered, but now going forward to the next one, right, we have the concept wise, like how they are given in the study material of the ICAI. Right, so now in the further videos we'll discuss these particular MCQs. So let me know that how things are moving forward for you if you're watching this particular small videos, right? So even if you watch 1, 2, 3, 4 as time permits, or you can go for a binge watching of all the 38 case studies together over there. So you see first is integrated, then is concept wise, and then you have chapter wise, series of the standards wise. Right? So SQC 1, SA 200. Right? So many students have a contemplation that we need a proper book to prepare for the MCQ. So you've seen so many of the videos, I assume, so far. And if you think that this can contribute, otherwise just don't unnecessarily increase the stationery and the books at your place. But if you think that this can contribute for the preparation for your exams, right, so then certainly you are the best person to decide for yourself that whether you need any more book regarding the preparation of the MCQ part also, right? So the book is running into, loads of pages over there, right? So I'm just looking into a few pages over there. But yeah, if we look at the total number of the just 343 pages, right? So that's quite a lot of content in the book. Okay, right? So we'll continue with our MCQ discussion series.